In the energy quadrant, taking a look at the June crude oil futures, up 3 straight sessions now, turning to finish the week positive after hitting its lowest intraday price level since February 26. Now, off of that low price level, crude oil has rallied 3.75% from that low in the last 3 days, all the way up to today's close. And now we also finished the second straight week higher in price for crude oil, up about 1.7% this particular week. The high today, 79.60, that was up just short of a half of 1%. We basically finished just below that level, so we finished on the highs today. That's another positive sign. And then the low, down 0.8%. There was a decent drop early on in the day. 78.58 was that low price. Now, data showing the potential of more easing in inflation and a stable job market can be bullish for crude oil, and we are getting that kind of economic data lately. Now, normally economic data isn't necessarily bullish for crude oil when it's weak, but at this particular point in our economic history, because it bolsters the case that the Fed may cut rates in September and possibly again in December, that is helping. And we got weaker than expected Philly Fed yesterday, higher jobless claims for the second week in a row, and today we got the Conference Board's leading index of economic indicators, which fell more into the negative than expected and then the prior week, coming in at down 0.6%. All of that bolsters rate cut cases, which is pushing crude oil partially because of dollar weakness. Dollar weakness has resumed, and the traditional inverse relationship with crude oil is a tailwind for crude oil. In the aggregate, the dollar had its lowest weekly close since the beginning of April, while the euro closed at its highest level since the second week of March. And all of this was a tailwind over the last 3 days for crude oil.